Hey YouTube, welcome back. My name is Oliver Jan. If you're new here, I love to talk about personal finance, entrepreneurship, as well as financial independence. In today's video, I want to share why exactly a Roth IRA is so important and why you should consider opening up an account right now. So let's say you're a fresh 22-year-old and you've just graduated from college, and you just started landing your first job. Congratulations. Now the thing is, I know you want to blow that money and you want to have a lot of fun at the bars and you want to go probably not the bars due to coronavirus, but I know you want to have some fun. However, what I would recommend is that you actually set aside a little bit of money and earmark it for something called a Roth IRA. What exactly is a Roth IRA, you might be wondering? A Roth IRA is considered an individual retirement account. And before you go to sleep, let me explain a little bit more about it and why it's so important. The Roth IRA is really cool because the money that goes in is post-tax. And that means the money that sits in your account, you don't owe any taxes on because you've already paid it. Now, the other crazy part is that because it's an individual retirement account, that money will sit there and it can compound for you over time until you turn 59 and a half. Let's just round to 60 to make it a little bit easier. So now, once you turn 60 years old, well, guess what? All the money that you put into that account will actually, you can take it out tax-free and without paying any penalties whatsoever. This is very different from like a 401k or a traditional IRA, where if you were to take the money out early, you owe taxes on that. So this is very different from a 401k or like a HSA, because if you were to take that money out, you actually will owe taxes because all that money that went in was pre-tax. That's really cool and all, but why should I actually put the money in then? And why should I get started investing? Especially when I'm 22. Well, it's so young. Retirement's like, that's like 38 years away from now. So yeah, I know that's crazy, and I know it's a long time, but I would say this though. If you actually put in the money, you let it grow for 38 years, according to my calculations, as long as you invest it in an index fund that tracks the US total stock market, you are expected to average roughly 7% gains per year. That means from the age of 22 to 60, you will be sitting on roughly $1.2 million in terms of your contributions, as well as the gains that it made during that time. That's a lot of money. That's $1.2 million is nothing to sneeze at. And the other benefit is that if you start doing this early and you start doing it often, all that money, that $1.2 million, can be withdrawn tax-free and penalty-free. So yeah, sounds pretty sweet, huh? So there's another aspect to this and why you might want to consider starting early too. Because you just started your career, you're probably going to be taxed at the lowest tax rate possible. And if that were the case, right, and you suspect that in the future you'll probably be making more money, well, that's going to open you up to more taxes, right? So it's actually very beneficial then to take a tax hit now and put that money into an account that preserves it and lets it grow tax-free, versus you're going to be paying a lot more taxes later. And if you decide, let me finally open up an account, the impact won't be as beneficial. So I'll use myself as an example for this. Currently, I've been investing in a Roth IRA for the last 5 years or so. And I started when I was a graduate student, and I was only making very low amount of income as a grad student, but I was still able to shove aside like a couple $1,000 per year into this type of account. I believe the maximum at the time was $5,500 or so. But nonetheless, I was able to contribute and make these contributions to this account. Now I'm working and my tax rate's a lot higher, so it's a lot less beneficial now for a Roth IRA. But because I got started early, all that money that I put in is going to grow for me over time, and I'm going to take advantage of something called compound interest. All right, so you're probably wondering, all right, that's cool. I'm going to put the money in, but do I just leave it as cash, or is it just going to grow for me automatically? The answer is no. You actually have to put that money into different types of funds. Like you can invest into stocks, ETFs, cryptocurrency if you want, bonds, whatever you want. It's all there for you. But my number one recommendation, and the simplest one I could recommend, especially if you're young, is to get invested into stocks, because stocks offer the greatest return. And if you invest in something called like a total stock market index fund, which is a lot of words, it allows you to be more diversified. So basically, if you think about diversification, you don't want to just invest in one stock. Like you can if you want, but that's a lot of risk. What happens if that company just goes kaput? What you can do then is actually spread out your risk and invest in thousands of companies, but no one has the capital to just invest, one stock from every single company. What you can do then is open up an account, buy something called an index fund, and allow yourself to be open to all those different companies then. So the one that I recommend personally is offered by Vanguard. It's called VTSAX, which is a Vanguard Total Stock Market Index Fund. And it tracks roughly 3,300 companies for roughly $90 per share. So instead of paying, I don't even know how much that would cost to buy a stock from every single one of those thousands of companies, but for $90, you can diversify yourself immediately. That's a pretty good deal. I've mentioned a lot about why it's important to get started early, but I haven't really mentioned why you need to get started now. And the reason why is because if you don't get started now, you actually will lose out on this opportunity for the rest of your life, which sounds kind of scary. With that being said, right, if it's like kind of like that principle, if you don't use it, you lose it. So if you don't actually make the contributions for this year of 2020, you can't just go back in time and say, oh, I forgot to put in that amount. Let me just put it in right now. It's gone if you don't do it. So for me in 2015, I couldn't just go back to 2012 or 2013 when I just started grad school to put in money. That opportunity and that tax efficiency was lost basically. So learning from me, definitely get started early and just keep making those contributions. So you might be wondering to yourself, well, that's all fine and dandy, but how do I get started then? How do I make an account? Well, follow me through this next step and I'll show you step by step on how to get started with opening up an account. I personally prefer Vanguard, but it doesn't really matter which trading firm you use. I know there's like Fidelity, Charles Schwab. You can open up one with, I believe, Ally too if you want. But I like Vanguard because they offer a lot of actually really low cost funds that are really beneficial. And they help you diversify yourself in many other areas too. So you don't just get to invest in like the US, you can invest in like Europe or the international markets too. So I'll guide you a little bit step by step into that. By the way, I'm not a financial advisor, so everything I'm saying right now is just sheer entertainment, but just my own 2 cents, really. So we're going to go straight to Vanguard's homepage, and we're going to go to Open an Account. Once we click that, it's going to take us through some prompts. So we're going to open a new account, of course. And we're going to go through an electronic bank transfer. So because we're new, we're just going to select no, I'm new here, and press continue. And if you already have an account, then you can just go ahead and put in your credentials here. Otherwise, we're going to select no and go continue. So before everything started, we need to know our routing and our account numbers to make sure we can connect our checking account to our Roth IRA. We also need to know what kind of account type, which we know of already, and to complete this application. So here it's asking us what type of account we want to make. Because we were just talking about retirement and Roth IRAs, we're going to select retirement. We can also open up brokerage accounts and other types of like educational accounts too. So we select retirement and go straight to Roth IRA. We can also select traditional IRAs too, but the Roth IRA is what we want to go for. So here they're just going to be asking us what's our primary and our secondary investment objectives. So here I don't think the options really make a big difference as to what's going to happen to your account. So I would just select whichever ones that you want to handle. So for the first one I just selected growth, the second one I selected income. And if you're lucky enough to have multiple funding sources, then this is great, but otherwise just select salary. And then here, what's going to happen is we're going to be prompted to put in a lot of information. And I'll leave this up to you. Obviously, this is just a simple form that you have to fill out. You're going to tell them about yourself. You're going to select the funding sources. You're going to sign and do some agreements as well. All right, so now that we've successfully opened up an account, we'll see this on our homepage when we go to My Account. we're going to select contribute and withdraw. And we're going to contribute to our Roth IRA. So once we get here, we're going to have the option to contribute to 2020. Because I've already maxed out my account, it's not going to show much. But what I do here is I would just go ahead and contribute directly to your federal money market account and leave it as cash. And later on, go ahead and transfer that money into VTSAX by making sure you select the correct fund and you type in VTSAX into the account. And from there, yeah, you've done it. Once you've successfully funded your account, keep going until you hit the max if possible. Well, that just about does it for me. I hope this video was really informative. I hope you learned a lot too. So if you like this type of content, feel free to leave a like, comment, and subscribe. I'll get back to everyone in the comment section below. And yeah, definitely look forward to seeing you in the next videos.